All right, let's dive right into this explainer. Today, we're looking at the absolute unsung heroes of the stock market. We're talking about sectors that don't just survive on everyday necessities, they actually thrive on them. You know, in a world where it feels like everyone is constantly chasing the next viral tech stock or just looking for that quick speculative win, there's actually a massive, quiet giant sitting right inside your home. It functions as this classic defensive asset, offering a uniquely steady harbor when the financial waters get rough. So we're going to unpack exactly why the utility sector is considered the ultimate stable investment haven and how its very specific economic mechanics can completely change the way you look at building long-term wealth.
So what investment actually survives an economic crash? It's the million-dollar question, right? Every investor asks it the second the market starts getting rocky and those headlines turn negative. Think about it. When the economy takes a huge hit and consumer spending just freezes up, it's usually the flashy, high-growth stocks and the luxury companies that are the very first to plummet. I mean, the revenues can dry up literally overnight. But there is a financial shield out there, and it's built entirely on reliable, everyday services that simply cannot stop functioning, completely regardless of what the stock ticker says or what the overall economic climate looks like.
Electricity, water supply, gas transmission, waste management. We're talking about the foundational services. These aren't just businesses. They are the absolute basic pillars of modern life. You pay these bills every single month, like clockwork, probably without even thinking about it. But here's kind of a wild fact. While absolutely everyone pays these bills, very few people actively realize they can actually be on the receiving end. They don't realize they can profit from them. In the investment world, this is the utility sector. It gets dismissed as boring all the time, but it has a distinct advantage over almost every other industry out there. It has this incredible superpower called profit transparency, which is heavily tied to exactly how these companies are structured.
Now, that profit transparency comes down to one really vital concept, the rate review mechanism. To get this, you have to understand that utilities are what economists call natural monopolies. I mean, think about it logically. A city really only needs one single network of water pipes underground, right? Having 5 competing water systems from 5 different companies tearing up the streets would be an absolute nightmare of inefficiency. So, because they operate as monopolies by nature, the government steps in with heavy regulation, primarily using this rate review mechanism. Regulators basically look at the company's capital input ratio, which is just a fancy way of saying how much they're actually spending on building and maintaining the infrastructure, and they use that to mandate a legally approved profit margin. This effectively stops the utility company from, charging you $1,000 for a single glass of water, but it also legally guarantees they'll generate enough revenue to keep those vital pipes running. For an investor, this is magic. It means you can clearly foresee their profit margins. It drastically reduces those sudden operational surprises and creates incredibly predictable cash flows. Because of that government rate review, operational guesswork is basically just removed from the equation. You get regulated returns, highly predictable cash flows, and profit margins locked in by approved rates. Compare that to the unpredictable market returns you see in your typical non-utility company. Those businesses are completely at the mercy of wild operational uncertainties, changing consumer tastes, sudden economic shifts. Will consumers actually buy their new flagship smartphone this year? Will a new startup steal their market share overnight? Who knows? But with utilities, that level of transparency is just unparalleled. It trades the wild, heart-pounding thrills of the broader market for highly structured, regulated stability. And honestly, when it comes to protecting your money, boring is very often beautiful.
Which brings us to a truly powerful economic concept, demand rigidity. Regardless of an economic boom or a massive bust, the public's demand for basic utilities remains fundamentally unchanged. People don't just stop heating their homes or turning on their lights just because GDP dips or the broader market pulls back. Consumer demand in this space simply does not flex, bend, or break when the economy tightens up. And because of this extreme demand rigidity, utility stocks historically and continuously outperform the broader market during times of turbulence, panic, or recession. They really are the ultimate anchor.
So, how do these defensive traits translate into actual financial benefits? Well, it's a really powerful one-two punch for investors. First up, stable cash flows allow utilities to maintain high dividend payout rates. Because their revenue is so predictable and their capital expenditures are very regular, they reliably and consistently return cash directly to their shareholders. Second, and this is huge, they offer incredible inflation resistance. In a high inflation environment where the cost of materials and labor is just skyrocketing, regular companies watch their profit margins absolutely evaporate. But utility companies, they're typically allowed by regulators to adjust their rates. They can legally pass those increased operating costs directly onto consumers. This effectively protects your real returns from being eaten alive by inflation. It's a built-in economic safety valve that very, very few other industries possess.
But hey, no investment exists in a perfect vacuum, right? We have to look at the full picture. Utilities are currently facing a massive industry-wide structural shift. On one hand, you have this immense long-term growth potential from the net zero emissions transition. Power companies are pouring massive amounts of capital into renewable energy sources and modernized smart grids. This structural reality gives the sector incredibly strong long-term growth momentum. However, and this is the flip side, there is severe short-term pressure. Utilities are incredibly capital-intensive by nature. Building out massive wind farms, solar arrays, and new smart grids requires a lot of upfront borrowing, which means they operate with high debt ratios. So when the broader economy is in a high interest rate environment, their interest expenses shoot up rapidly. This can, and definitely does, squeeze their profit margins in the short term. It's a really delicate balancing act between funding the structural energy transition of tomorrow and managing the heavy borrowing costs of today.
Ultimately, this is exactly why the utility sector truly serves as the cornerstone of stable wealth. Even with the modern short-term pressures of high interest rates and the massive capital needed for the green transition, the core mechanics of this sector have not changed one bit. If an investment strategy is focused on long-term wealth accumulation, experiencing low volatility in an otherwise chaotic world, and generating continuous, highly predictable cash flow, well, utilities remain an absolutely indispensable foundation. They are the defensive bedrock that basically allows the rest of a portfolio to take calculated risks elsewhere.
So as we wrap up this explainer, I want to leave you with one final thought. Is your portfolio grounded with a stable foundation, or is it entirely at the mercy of the economic cycle? It is so easy to get caught up in the daily excitement of high-flying, volatile stocks. But as we've explored today, the greatest financial shield might just be the very companies powering the screen you're watching this on right now. Take a critical look at your own strategy and ask yourself if you might be missing this vital defensive anchor. Thank you so much for joining me for this deep dive, and keep learning.